Greetings, y'all. Welcome to another episode of Brown Girls Are Beautiful. I'm your hostess and your melanated queen, Lil Foxy, aka Seventh Wonder. Okay, let's get into it. Y'all, I'm feeling good energy right now. We're in the springtime. We're in Aries season. This is our time of manifestation, right? So I'm manifesting what I want into fruition. I'm wearing my lucky yellow, y'all. My golden yellow. All right, that's Oshun energy, if you're into that. I need to wash my hair, so bear with me because I might do like a hair care video. Because I might switch it up a little bit on this channel, y'all. Y'all might get some different content from me, so just stay tuned. But like I said, as promised, we're going to be talking about car insurance, automotive claims. For those of you who had bodily injury claims and you have car insurance and you don't know how it works, this is the video for you. So tune on in, okay? Ladies and gentlemen, I am back. I was trying to get the camera adjusted so that I could do this presentation. I don't know. I think I need brighter lights, more lighting in here or something. So I'm going to try to work the best way I can with what I have. And I hope you will appreciate this presentation. So we are going to talk about auto insurance and how it works. Okay, I'm going to clip this microphone on and hopefully this will come out clearly. All right, so you can hear me. So with that being clipped to me, I have a whiteboard in front of me with the dry erase marker and the eraser from my tutoring sessions, you all. So let me back on up a little bit so that you can see this presentation. Now, usually when you get auto insurance, and it's a requirement, by the way, whenever you have a car, right? So let's go ahead and start from square one, okay? Whenever you get a car and you are purchasing the vehicle, if you have a lien holder, meaning if you're financing the car, you're not purchasing the car in cash. The lien holder or the finance company or the bank from which you are purchasing the car from, because they're giving you a loan for the car, basically. I don't care if it's a credit union or whatever bank you use. They are going to require that you have car insurance on that automobile. And the reason for having auto insurance is because that finance company has a vested interest in the vehicle, okay? That means they want to make sure that your vehicle is covered at all times in case something happens, because they are lending and loaning you the money. Same thing with homeowners insurance. If you have an FHA loan, a conventional loan, a USDA loan, these things it works the same way as if you had a house, all right? So anytime a finance company gives you a loan, they want to make sure they have insurance on that property that they're lending you the money for. Hopefully that makes sense. Now, there are different types of insurance. You heard of full coverage and you heard of liability. So let's start there. Let's start with full coverage and liability. Some people don't know the difference. I've had many people that I've spoken with over the phone tell me that their agent told me that they were covered. Well, I don't know. She said I was covered. Okay. So you can be covered and not fully covered, all right? So let's look at the difference, because there are a lot of people that don't even read their policies. They just get something in the mail and then that's the end of it, right? Or they just sign whatever they have at the agent's office and they are not fully understanding what they have. So this is why I'm doing this video. All right, let's look at liability coverage, okay? You have liability and then you have full coverage. Very simple and straight to the point. Liability coverage and full coverage, you all. Liability covers the third party, okay? This is third party coverage, okay? Third party coverage. Full coverage is first party coverage. And what does this mean? This means first party is you, okay? You are the driver. You are fully covered. That's what this means. This is you. This is third-party coverage. This is everybody outside of your vehicle, all right? So for an example, liability is only coverage for, say you get into an automobile accident. Now, say you are at fault for the accident. This is where your liability coverage kicks in, right? Liability is for the other person. Full coverage is for you and your vehicle. That's how that works. All right. So if your agent tells you that you are covered, just because you have liability does not mean you have full coverage. Okay. So I want to make that clear. First party coverage is you. Third party coverage is for the other driver. All right. Now, with liability coverage, there are certain things that are included with liability coverage, and I'm going to go over those. All right, just a second. Let me clip this microphone back on. Okay. I shouldn't have taken it off. Hold on one second, y'all. Okay. So you have, say you have bodily injury, okay? Bodily injury coverage. Bodily injury coverage is exactly what it says. This is in case you get into a car accident, you're at fault, it was an accident, and the other person or the other people in the other vehicle got hurt. That's what comes with liability coverage, okay? Bodily injury coverage is included with liability. So if they have injuries, your insurance carrier, if they find that you were at fault for the accident, they're going to pay this so that you're not sued, so they don't come after you for the injuries. That's why your insurance kicks in to cover that. It also covers the other person's property damage, okay? Property damage. No, property damage is not just a car, y'all. Property damage is any type of property that was damaged as a result of the accident, and if you are at fault. All right. Now I'm going to also explain what at fault means, okay? Because some people get a little misconstrued on that as well. So you have liability coverage covering the other people in the other vehicle. Your insurance is going to cover this for you. Bodily injury coverage if anybody else in the other vehicle was injured. And then property damage means not only their vehicle. Property damage includes anything that was inside of their vehicle. They might have had a laptop that got broken. They might have had cell phones that got damaged. They might have had, whatever was in that vehicle. It could have, electronics might have gotten broken. That is what property damage is, okay? So whenever your insurance company does an investigation, they will take statements from you, the other driver. They'll look at the police report. They'll gather witness statements. They'll look at the accident photos, accident scene, all these different things to conduct their investigation. If they determine that, you're at fault, then they'll take care of this for the other driver. You don't have to pay out of pocket for this to the other driver. Now, the only thing you have to worry about is your deductible. How does the deductible work? Everybody should know this. So in insurance, you have the option of having a $0 deductible. Just understand that if you have a $0 deductible, your premium is going to be a lot higher, okay? $0 deductible means if you have an accident, you don't have to pay a deductible at all. Now, this does exist. $0 deductible. You also have very often a $250 deductible. I've even seen a $500 deductible, and then sometimes you'll go up as high as a $1,000 deductible. All right. Now, how does this work? So say you're involved in this accident. Say it's determined that you're the at-fault driver. Hold on, let me make sure I'm explaining this correctly. Okay, there's no deductible on that side. The deductible actually goes to the full coverage side. My apologies. Okay, so let me go ahead and back that up for a second. So with these deductibles, let me explain how these deductibles work, okay? So for liability coverage, you don't need to pay a deductible, all right, because everything is taken care of under your insurance carrier, whether it's State Farm, Progressive, Allstate, Liberty Mutual, USAA, Geico, whatever you have. They're going to go ahead and take care of it for you as long as your coverage is what's called active, okay? As long as your coverage is active. When you have full coverage, that's when your deductible kicks in, all right? And the reason your deductible kicks in is because that's when your damages are covered, whether you're at fault or not, okay? Whether you're the at-fault driver or not, you have full coverage. That means your insurance company will cover your damage, all right? Whether you're at fault or not. This is why you have full coverage, because, hey, you were involved in an accident. You want your vehicle fixed, guess what? Your insurance is going to take care of that. But you will have to pay these deductibles, okay? And this applies to full coverage. So you can have a $0 deductible. You can have a $250 deductible, a $500 or a $1,000 deductible. Now, depending on how low your deductible is, means that your premium is going to be more expensive. If you have a higher deductible, like if say you have a $1,000 deductible, then that your monthly payment or your monthly premium is going to be less expensive. Hopefully that makes sense, okay? Now, full coverage includes two things. You have comprehensive and you have collision coverage. So collision coverage is pretty self-explanatory. That's if you're involved in an auto accident with a vehicle of some sort. And it doesn't have to be a vehicle. It can be, you know, you ran into a brick wall, you ran into a house, you ran into a fence. That's still considered a collision. And a lot of people don't understand that. Even if you hit a tree, people think that that's not an accident. It is technically still called a collision, okay? So collision coverage is what's included with your full coverage, all right? You get collision coverage and you get comprehensive coverage, all right? Comprehensive coverage. These are two things that are included with your full coverage. Collision and comprehensive, all right? Collision and comprehensive, y'all. And I'm going to explain that in just a second. So I've already explained collision. So comprehensive, as you can clearly see right here on the board, and my apologies for this, comprehensive coverage would include, say, a deer ran out into the road, okay, and struck your vehicle. That happens a lot. There are deer hits that happen all the time. Animals run out into the road, dogs. I've heard of someone striking a cow, just different animals, and this can happen. So that's included with the comprehensive coverage. If your car is stolen, that's a car theft. That's considered comprehensive coverage. If your car catches on fire, that is considered comprehensive coverage. If lightning were to strike your car, that is considered comprehensive coverage. If a hailstorm happened and it caused damage and, you know, you had dents all over your vehicle, that is comprehensive coverage. If you have a crack in your windshield, say, you know, you were riding down the road, there was a big truck, it kicked up a rock, it struck your window or your windshield and it caused a crack, that's comprehensive coverage, okay? So all of these things are comprehensive coverage. Now, mechanical breakdown, that's something different. That's not covered by your insurance carrier. Okay, you need to have a car warranty for that. So a lot of times, if you try to file a claim for a mechanical breakdown and they send an adjuster out to look at your vehicle and they determine that this was not caused by a collision or a comprehensive claim, they're going to deny your coverage. They're going to deny your claim, excuse me. All right, so hopefully you understand what comprehensive coverage is. So usually anything caused by the weather, a fire, or theft, things like that. Now, let's get into other types of coverage that comes with your full coverage. Just because you have full coverage does not mean rental is included on your policy. And some people have that misconstrued. Rental coverage is an additional optional coverage that you can opt to have added on to the policy. And you have to ask for that. So rental is not automatically included. That is an additional option, rental, okay? Rental is optional. So everybody, in case you didn't know, because a lot of people think that they automatically will have rental on their coverage and on the for full coverage, and they don't have it. Okay, that is something that is optional. Also, you have something in certain states. The liability limits are different. Okay, so just in case you didn't know, in Florida, for the minimum coverage that you can have in Florida is $10,000 of liability coverage. That means if you get into an accident and you're at fault and you hit a Maybach, all right, and they have to take care of the damage to that vehicle, it could exceed your policy limits. What does that mean? That means that if it exceeds your policy limits, then that particular person that you got into the accident with has the right to come back and sue you for the additional damage. So that's why it's good to always have, more than the minimum coverage. But I know a lot of times people, they get the minimum because it's cheaper. But just understand that if you get the cheapest coverage out there and you get involved into, like, we've had multi-car accident situations happen where our insured was at fault and they caused like a domino effect, rear end collision. They might have damaged 2 to 3 vehicles and it exceeded their $10,000 liability coverage, right? $10,000 does not go very far when you're talking about repairing vehicles, especially say you have a Mercedes involved and then you have like an SUV. You have 3 vehicles involved and now everybody needs their vehicle fixed. Well, $5,000 goes very fast. Okay, that might just cover one vehicle. Then you might have another vehicle that's $3,000. Now you have another vehicle that's $4,000. Well, you've already exceeded $10,000 right there. So what happens usually, because I've dealt with Florida claims a lot, heavily, that's something that I actually specialized in. Those people will get an attorney very, very fast in Florida. Okay, they're notorious for it, and they will start asking for our insurance policy limits. So we have to, by law, in 14 days, disclose the policy limits as long as the attorney sends over the affidavit of disclosure. They request that, we have to send it to them, and then we have to put our insured, which would be you, we have to put our driver on notice, letting them know, hey, we have an attorney that just asked for the policy limits, and now they're asking for a preservation of evidence. What is that? That means they don't want you to throw out any evidence that pertains to this accident. That means anything such as your cell phone records. There's a long laundry list of things that they tell you that you must preserve. Photos, anything in the vehicle. They have some type of black box that they refer to. A lot of things, okay? A lot of things you cannot get rid of. You have to preserve the evidence because this is what the attorney is requesting. So that's what happens in Florida, you all. In California, it is my understanding that you only have to have $5,000, which is crazy to me because there are a lot of high-end vehicles in Los Angeles, California, Malibu, Santa Monica, Beverly Hills. Those places, I don't know why they would have such low liability limits. All right, but anyway, let's get back to full coverage, you all. Full coverage also has something called MedPay. All right, and we're going to talk about MedPay because MedPay are medical payments. All right, so basically MedPay, and I wrote it right here, would cover if you or someone in your vehicle was injured as a result of the accident, and you can actually pick and choose how much you want them to pay out for, like the hospital bills, or if you get paid per week for being out of work. That's what MedPay covers, okay? So it's medical payments as a result of injuries from the accident, and it covers you or the people that's in your vehicle, regardless of who's at fault. That's how MedPay works. You also have something that's included called uninsured motorist property damage. uninsured motorist property damage coverage, okay? Uninsured and underinsured motorist property damage. Now, it's exactly what it sounds like. So what that means is if it's uninsured, that means that, hey, you were driving down the road, somebody rear-ended you, the third party, right? The person in the other vehicle rear-ended you. They're at fault. But guess what? Once you go and file a claim, they said they had insurance, they don't have insurance, right? That means they are uninsured. So what happens is if you have full coverage, right? That means your uninsured motorist property damage coverage kicks in, right? You're not penalized per se for that, but it's just a coverage just in case the other driver didn't have insurance. You have uninsured motorist property damage, okay? That's how that works. Now, the underinsured motorist property damage is under your full coverage. How does that work? So say the other driver had those little measly $5,000 or $10,000 in liability coverage, right? So you only have $5,000 to $10,000 to cover your Maybach or your Lamborghini, right? So that means they're underinsured. They don't have enough on their policy to cover your damage. Well, that's when your policy kicks in to take care of it, okay? So that is how full coverage works, you all. Hopefully you understand this a little bit better. I know I could have done a better presentation for you all, but I just thought this was interesting information because a lot of people do not understand their policies, all right? There's also something called, and this is only in certain states, I know Florida is one of them, personal injury protection coverage. It's called PIP coverage, right? And they always say it's a no-fault coverage. It's a no-fault coverage because it doesn't matter who is at fault. It's a personal injury protection coverage, meaning that if you or someone in your vehicle was injured, that coverage automatically kicks in, all right, for the injuries. And it follows the vehicle. It follows the vehicle. So a lot of people are not aware of how that works. And we have to do an investigation to find out, even if, say, all right, so for instance, someone's in your vehicle, they got injured, right? But they have their own insurance at their own house, but they were in your vehicle. So we would have to find out, since that person had their own insurance, and since that person had their own vehicle at their own house with their own address, they would have to file their personal injury protection coverage under their own insurance carrier. It doesn't actually fall under your insurance because this person has their own separate policy. And a lot of people don't understand that in Florida. Florida is a little tricky. And then I'll get into liability later, meaning who's at fault and all of that and how that normally works. So I'll save that for another video. So just go ahead and follow my next video talking about liability. Liability is basically who's at fault. So I'm going to cut the video here. I hope you understand more about coverage, liability versus full coverage, and how that all works. And tune into my next video to hear about how we determine who's at fault. All right. Thank you so much for tuning in. I hope this video was useful. Signing out, y'all.